So here we are on the weekly chart of ITC. We can see that the price has arrived at an important area, which is the monthly resistance. The price has made a good wick rejection. The issue is the lower tail. We don't love this lower tail. We just want to see this upper wick rejecting the monthly resistance. But anyhow, this is a good downtrend. The price has made a pullback to test the monthly resistance. So a bearish bias from the weekly. Let us look at the monthly. Even in the monthly, we see that the price has broken the 50 EMA. The price has broken the monthly support and has made a pullback with this green candle. So this also gives us a good bearish bias from the monthly. Let us go to the daily. In the daily, we see that there is a recent uptrend. The price has broken above the 50 EMA. We can draw a trend line to represent this uptrend. Now we want some sort of confirmation from the daily to go short, to sell ITC, because we have established a bearish bias from the weekly and the monthly. So we are waiting for the break of this trend line and the 50 EMA probably. Let us see how the price unfolds. In the very next bar, the very next candle, we see that the price has broken below the 50 EMA. The price has also broken below the trend line. Let me switch to the line chart to see. The price has given the first lower low. You can see it has made the first lower low. So these are the signs of a potential weakness in ITC. So looking at this, looking at the heavy trend in our favor from the weekly and the monthly, we decide to go short. We decide to sell ITC. Let us do that. We will use the short positioning tool. We will click here. We will enter short here. Now, again we have two options. If you are a conservative trader, you can set your stop loss above the monthly resistance and go for 1:1. If you are an aggressive player, a little bit aggressive, then you can keep your stop loss just above the candle, the recent momentum candle, and go for 1:1. If you choose this option, you have a chance that the price goes down a little bit and then moves up to create a wild swing. Take out your stop loss and then continue moving down. And if you have a stop loss above this, then you have a risk that your target is far below. So the price needs to move much down, much below this area to get to your targets. We will choose the conservative approach and let us see how the trade works. We get a nice move down. Again it moves down, trying to move up. It is giving a pullback. Let us see. And the price is coming up near our stop loss. And our stop loss gets taken here. You see, there are wild swings. The stop loss gets taken here. We end up making loss. If we had gone for the aggressive trade, then our target would have been achieved easily, right? But anyways, we decided to be conservative here, and that came with a wider target which could not be met, and the price moved back up to test the area of monthly resistance, and we ended up making loss. So this is a trade failure. Losses are part of trading. We have to accept that. Markets are not perfect. They will not move the way you want them. So losses will occur. We will have to accept it no matter what. So we are done talking for the positional part. Let us look at the 75 minutes part. how the trade plays out. Let me first go back to this candle. We will delete this and go to the 75 minutes. Now here again we have a moderate uptrend. The price is making higher high, so we need some sort of confirmation from the 75 minutes to go short. Let us see what happens next. Now we have a good break of this trend line, but this is not enough for us to go short, because you can see that the price has not broken the trend line with momentum. We want good candle pattern, we want good price action. This is a small bodied candle, not enough for us to conclude that it is indeed a trend line break. We will wait, we will not be impatient, we will wait. Now the price is indeed trying to go down again, we will wait. Yes, now this is a good confirmation. The price has gone below the 50 EMA, and the price, let me switch to the line chart, and the price is making lower low and lower highs, right? So this is indeed a good confirmation. Now we can now go short. We can go short here with a stop loss above these 75 minutes resistance and go for 1:1, minimum 1:1. And we have our target, right? So the 75 minutes, the swing trade worked pretty well. Let us go to the daily back. We will now understand the 15 minutes pattern, 15 minutes trade. Those who want to trade intraday, what they can do, they can go to the 15 minutes time frame to see if there is anything. So in the 15 minutes time frame, the price has already broken below the 50 EMA and has started forming a kind of a downtrend. Not actually a downtrend, it is a sideways movement. We can see the equal highs and equal lows being formed. So we will do nothing, we will just keep on waiting. Let us see. And the price breaks below the trend line with good candle. We can go short on this one, but I will wait. I will still not go short because this is at almost equal level at these two candles. As these two candles, this candle is almost at an equal level, so it is quite probable that the price can bounce back up. I will wait for the break of this candle's low. See, the price bounced back up. Let us wait. Now this is some good indication. Now see, how many wicks can you see? There are many wicks which are rejecting the 50 EMA. So this is a good bearish confirmation. We will wait. Still we will wait. No, this is the wick is rejecting the downside, so not a good thing. We will wait. Now this is a good candle, right? This is a good big candle. We can go short here. Now this is confirming that price is wanting to go down. We can go short here with a stop loss here and good 1:1 target. Let us see how the price unfolds. And we get our targets. So this is a game of patience. We have to wait, and after good confirmations only we will take entry. The reason why we did not enter here, although the trend line was broken, because this low, if you see, it is at a similar level as these lows, as these candles. So it was quite probable that the price can bounce back again, because it had bounced back earlier. So we waited for the price to break below this level, and that confirmation came here. The price clearly broke down with a good red full bodied candle, and then we decided to go short with a tight stop loss, because it is an intraday trade. We will not have huge stop losses like this. We will have tight stop losses because we just want to trade intraday. So you can see that the concepts are remaining the same. We are using the weekly and the daily to establish bearishness, and we are using the trend line breaks on the daily chart, on the 75-minute chart, and on the 15-minute chart to give us good trade opportunities. It is you who will decide whether you want to take positional trades, swing trades, or intraday trades. Whatever it is comfortable for you, you have to identify it yourself, and this will only be identified once you trade. Thanks for watching. Goodbye.